My last 2 weeks analysis from the daily charts yielded over 1,000 pips, including a possible 600 pips from last Sunday's analysis. So what I'm going to do today is have a quick recap over what we looked at last week and the explanations I gave you as to areas to look for to enter. At this point I must point out that this video is purely educational. I do not give tips or trade recommendations. You must make decisions for yourself. I am simply doing this as an example of how to trade from forex charts and what indicators and signs to look for. Now, what I mentioned last week, this arrow here is pointing to Friday daily candle on the pound. What I mentioned was this was a very bearish candle. Price previously had broken through this strong area of support that had gone back many weeks. What I said the week before was that price often will then return back up to this area and support becomes resistance, as happened on the Friday. So what I told you on the Friday was there were two possible methods of entry here. One is to look for what's called a 50% fib retracement, and I showed you by placing, this was Friday's candle, by placing Fibonacci onto Friday's candle from the bottom to the top, that we would be looking for entries in the area of 63.20, which is a 50% fib retracement. What I did say in last week's video is I would be quite content to enter at 6300, which I did. At 6300, my stop was just above the previous candle's high. I actually took it to 6410 just in case we came up and touched. On this occasion, as you can see, it didn't. Now, you could simply have placed this order on the Sunday night and walked away. I will show you here on the 1 hour chart what happened, but you didn't have to be here to do this. And what happened on the 1 hour chart, this was the market open, this was the close on Friday. The market opened here, price came up, touched this 50% fib that we mentioned on this page. We short at that point there, and the price moved down over 100 pips. And this was within 5 or 6 hours. So that was the first entry I told you could take. The second entry I mentioned was that we would look once again for price to come back and touch this trend line. Now we could have entered at 63.50 area, which is a horizontal line, or we could have entered here on the trend line, 63.90 kind of area, 63.70 I think it was. What you tend to do is don't go exactly to the pip for these trend lines, because there's always a chance it may fall 10, 20 pips short. And when we're looking for big gains down here of hundreds of pips, then 20 pips is neither here nor there. So, what happened on the 1 hour chart? Again, price came up and touched, to the pip on this occasion, the trend line. From that point there, had we shorted, and bear in mind we would have done this simply from our analysis Sunday and an order placed Sunday night. But what happened, that price then fell away all the way down here. So you're looking over a 200 pip move, again within 10 hours or so, and again from analysis we did on the Sunday night. And again, if we were to look again on the 1 hour chart, it happened again on Thursday. Price came up and touched. The move wasn't as great this time, but we were still looking at 64.10 area. Again, stop wouldn't have had to be that much further above, and again we're coming down here, 63.90, so about 90 pip movement. So this was done from analysis. Now, where do we go next week? Next week is even more tricky than last week, potentially. Monday, as you know, is USA public holiday, and next week is the week that the big guys return. As to where we go next, I don't know, but we look for charts again. And what the charts tell us? Charts tell us that price is once again back up here, and in this area here, we could have shorted again on Friday. Now, I don't trade NFP Fridays. I find it to be forex at its silliest, and I don't do it. And similarly, I don't trade late on Friday. And this movement here to the trend line, again we look on the hourly candle, came within 5 hours of the market close, so I wouldn't have been here. Now, as to where is price going to go next? The big question. The answer, I don't know. I have no more idea than anybody else, but what I can do is look at my charts and see what they tell me and see if I can guesstimate what's going to happen next. I'll give you advice what to look for. What we have here, price, as I say, has come back up and touched the trend line. So as I mentioned last week, what we could do here is press an OCO or OCO order. One cancels the other. So we could say if price was to come here, we would go long with our stop 20, 30 pips below the trend line. Equally, if price is to now fall away, we can enter here with our stop there. And as I said, one order would cancel the other. What's happening here is this movement, this pressure on this upper trend line has now been going on for many weeks. And what can happen eventually is obviously something can break. And what often happens, if you think of a cop trying to break down a door, he runs at the door, he bangs off it, he runs at the door, he bangs off it, he now takes an extremely big run at the door and finally breaks through. When these moves take place, then moves can be very fierce. What gives me a suspicion that things may be about to move up on the pound is we've now had a 5-8 cross. A 5-8 cross, if you read my ebook, is important, particularly on longer time frames. We are above the 55 EMA. We have stochastics pointing up. There's lots of things to suggest that the pound may be going to rise. But again, the areas to look for here and here. And again, you could do it on the one cancels the other order basis. You can be looking for a long or a short. Now, moving along to the euro. Again, last week, from the analysis that we made, you could have made hundreds of pips here. This was on the Friday, and I mentioned that price again had come up and touched the resistance line above. You could have entered on the Monday, the Tuesday, and the Thursday, every time at this point here, and each time for an average gain 70, 80 pips. Again, for this week, at the moment we're in no man's land. We will be looking for reaction here, whether the price is going to break finally and candle close and it will go up, or down here. In the meantime, we've managed to make decent profit from bounces down. Again, these areas are crucial. Keep your eye on those. The Swissy, similarly. Last week, Swissy was probably the best bet of all of them. I mentioned that this support line went back almost 3 years. And lo and behold, what happened is that Monday, Tuesday, and Thursday, price came back down to the area that I mentioned. Had you longed, you only needed a small stop down here, and you were looking for potential decent gains. Now, what's happened since then is we now have a price that's been trapped between this area of 56 and this area here of 70. So these are areas that we need to look for. We need to look for shorts or breaks here, and again bounces up or possible breakdowns here. Again, those are the crucial areas. Finally, New Zealand dollar. Last week, I mentioned again, we had this resistance area. Had you taken shorts at this point here, on the Tuesday, had you shorted 68.84, I told you your stop only needed to be 69.10 because it hasn't broken for weeks and weeks and weeks. So for a 10, 15, 20 pip risk, you had a good possibility that price was going to get down here 100 pips away. As it was, price moved a further 100 pips. So a 200 pip move from a 20 pip risk reward is incredible. There are these trades that are out there in forex. You need to know what to look for. Finally, the Aussie dollar. I mentioned to you in the last few weeks' videos about triangle breakouts and how that as price finally comes nearer to the point on these breakouts, the price often explodes. For the Aussie dollar for Monday, it's very difficult next week because of the problem of the US holidays and the big boys coming back. But standard procedure for this, for me, will be I will look for either a 50% retrace to the 84.54, let's say 84.60 area, or to come back to the previous resistance. But for the sake of 10-20 pips, I really want to be looking in this area here for a long. And I would look to long, say, in the region of 84.65, and my stop would only need to be down here, 83.70. Potential big gain. Good luck with your trading next week. Catch you again.